2025 was meant to be the big year for the crypto market. However, the more we progress through this market, the more it becomes apparent that crypto and especially altcoins are dependent on liquidity. With the next big Fed meeting coming on Wednesday, as you'll soon see, it's not looking likely the Fed will either lower rates or end QT. And so in this video, we'll be covering the two things that were needed to get the big Fed pivot. We got one, but not the other. Then why Jerome Powell is likely going to keep the brakes on the economy, probably causing a correction in the markets. And then finally, technical analysis is also saying we are due a pullback, and who gets hit the hardest? Altcoins. Okay, so first up, there were two things that were needed to get the big Fed pivot, and we got one, but we didn't get the other. Okay, so the big event of the week, as I record this on the Monday, is the next Fed decision meeting, which is happening on the 7th. And they'll be deciding whether they should lower rates or keep them the same. And also we'll find out, which is probably even more important for the crypto market, whether they'll be continuing with QT or finally ending it or beginning QE. Now, last week we discussed the two important things that were needed to get either a rate cut or QE. We needed inflation to be coming down, and we actually needed, counterintuitively, a bad jobs report and unemployment going up. So the reason we need inflation coming down is that if we have really high inflation, it really ties the Fed's hand and they can't do any money printing. So prerequisite one is that inflation has to be coming down. And this was good as we got a great report. However, jobs actually remained strong. Unemployment rate didn't spike up. And so what this means is that there's no good reason for the Fed to change course. So we got one, but we didn't get the other. And it's not until next week, which is already too late, where we'll get the next CPI. So inflation, we actually got a really good report. The previous month was 2.7, and this dropped all the way down to 2.3. The PCE, the Fed's favorite inflation index. Now, if we get a similar drop next month, we'll actually be falling below 2%, which would be massive. So we're certainly going to discuss CPI coming next week, as this next one is going to be critical. However, the bad news, well, good news for the economy, US jobs actually grew more than expected despite the tariff turmoil, and this meant that the unemployment rate actually stayed the same month on month at 4.2%. Now look at this chart. This is US unemployment, and this one goes all the way back to 1950. So you can see this is a lot of data. The range normally between 2.5 spiking at 7. Obviously you do get the anomalies when you go into a bad recession, particularly bad ones. The 2008 financial crisis, obviously COVID shot it all the way up close to 15%. However, as it sits at 4.2%, Jerome Powell is just going to think and say that this is historically low, meaning there's no good reason for the Fed to come to the rescue, as unemployment is exactly where it should be. So with strong jobs and unemployment under control, why is the Fed going to come to the rescue and suddenly end QT? This backs up my thesis that this week is probably going to be a correction week, meaning altcoins get hit the hardest. So this headline pretty much sums it up. Fed gets no reason to rush on rate cuts as the job market holds up. And if we check out the probability of a rate cut, the market now believes there's a 98% chance that the rate is going to stay the same, with a top end of 4.5%. So very, very likely rates aren't coming down anytime soon. Then add to this When we look at technical analysis, yes, we saw this massive drop taking us into a bear market. But for the past couple of weeks, we've had this really nice recovery rally, but we're now hitting into some major resistance. So this just says that we are due another pullback. So we could be coming back down to these levels, even in a good case scenario, before we then recover and break through the next set of resistance. And if we look at altcoins, we can see the recovery rally from the bottom. This is just Solana. This is up over 50% for Solana. Sui has been on an absolute tear. The recovery rally in Sui up 100%. Even Ethereum, which has been lagging for quite some time, has seen a nice 30% recovery. And as for the S&P 500, this one has seen a nice 18%. So even from a TA point of view, we are due a pullback, but then add to this that the Fed is probably going to be sticking with high rates, keeping the handbrake on the economy. It just means this week we're probably due a pullback. And who gets hit the hardest in a pullback? It is the altcoins. To guarantee that we get a big altcoin rally, we need the Fed to cut rates and especially end QT. But as we saw, yes, inflation is coming down nicely, but unemployment isn't going up, giving no good reason for the Fed to come to the rescue. The massive event which happened last week was Liberation Day, April the 2nd. And I'm guessing cautious Jerome Powell is going to want to wait and see how things with the tariffs are going to be playing out. And with technical analysis also saying we are due a pullback, who is going to get hit the hardest? Probably the altcoins. And the only saving grace this week would be some big news on either a trade deal or with Russia-Ukraine. And these could hit at any time. So still lots of uncertainty. So there you are, guys. Hope you enjoyed. So that's how I see this week playing out. Unfortunately, not the best news. And I do hope I'm wrong, but I don't see the big Fed pivot coming this week. Prepare for some more volatility. Now, if you do have any burning questions, simply use SuperThanks below. However, just remember to get rid of 100% of the comment spam and trading bots that plague YouTube comments. We are trying out the new SuperThanks commenting system. So to get your question or comment read and replied to, or just to say thanks, then use SuperThanks below. And for now, just to say, if you did enjoy anything in the video, then drop a like. And a big thank you to everyone who does, and I'll see you in the next video. Bye for now.